Yo, what is up, everyone? Welcome back to my channel. This is episode 1 of the educational series where I essentially just teach you guys everything I've learned about the market tools, insights, different patterns, stuff that you could use to become a better trader. Or if you're just starting out, just take note of these things and see if you could start implementing them and understanding how they work. Today, we're going to be talking about market structure and determining a bias for trading. And what better way to do this than to actually go on the charts? So, right now we're on NASDAQ futures, and I like to trade futures because, it's just a lot simpler than options. I'm going to make a video about that another time, but essentially, let's talk about what market structure is and what a bias is and how to determine a bias. Firstly, you want to go on the higher time frames because it provides essentially just a bigger picture for what is going on in the market. You take entries on the lower time frames because you can find, just better confluences, and you can see where the market is moving short term. But overall, if you want to catch big moves, the trends are made over time. You can't really see a trend that's made over 2 hours. It's not really a trend. That's too little. You want to have a big picture to see where the market is really moving, what direction, catch big moves, because that's how you swing trade. And you typically want to do this on the higher time frames, like I said, because it provides more data, more time, and these trends are made over time. So let's firstly go over what market structure is and the 3 different types of market structure. So here I drew out a little picture for us to illustrate, what the types of market structure are. And let's start with going over bullish structure. So everyone loves this one because this is where all stocks go up. Everyone's making money. Everyone's happy. And essentially this entails a low and a high. So initial starting point. And it's really simple. You essentially just keep moving up. You make higher lows and higher highs. So you can see that this low is higher than the previous low, and this high is higher than the previous high. And you keep going like this until you either reverse or break structure, and you can go into something called a consolidation area, where the market isn't really moving in a certain direction. It's kind of just bouncing back and forth in the same area. And as a trader, you want to avoid this area or this type of market because you can't really catch big moves. It's not clear where the market's going to go. It's really choppy, and you can easily get stopped out of a trade because there's no clear movement in the market. So as a trader, like I said, you want to avoid this type of market. And lastly, some people actually prefer this market because when this happens, it happens quick. So people really like scalping, and this is a bearish market. So very similar to a bullish market, you start with a high and a low, and instead of going up, you just go down. So you make lower highs and lower lows. So as you can see, this high is lower than this high, and this low is lower than this low. And you keep going like this until you break structure or you go into this consolidation period. So let's actually look at an example of this in the market. So right here, you could see a very clear trend. This was between December and January. And if we just, draw some simple lines, we start with a high and a lower high and a lower low, a lower high and a lower low. So this would be considered bearish structure. And in between all of these moves, say you want to trade like right here, for example, or like right here, you could see that after we made this high, lower high, and we made the move down, you'd be like, you know what? I think we're gonna make another move down because we are in bearish structure right now. So you would bet on going down here on a given day, and you can see that on some days you've had some really big moves, such as these ones right here. So you could have caught some really good trades. And then also, on the contrary, you have something called bullish structure in between these in between these moves. So you'd maybe go on like the 1 hour, and you can maybe snipe some of these like smaller moves to the upside. And this is why determining a bias in market structure is really important, because it just gives you an idea of what way the market's moving. So let's look at an example of bullish structure, and for this we can go on the 1 hour time frame just to mix it up a little bit. So here we start with a high and a low, and then we move up, move down, so we make higher highs and higher lows, sort of in this trajectory. And again, like on any given day, say you want to buy somewhere over here, you would have caught this amazing move up, set a stop somewhere below here. That's around like 1 to 3 risk to reward. So you're risking a certain amount and to make 3 times that amount. So typically you want to aim for 1 to 1, but anything above that is great. It just typically has a lower win rate, and that's also another topic for another video. But yeah, this is why market structure is really important. And let's go back to this example right here, where you actually see a break of structure. So over here, like we mentioned, that we have the bearish structure, you go down, up, but overall the moves down outweigh the moves up, and you keep making lower lows and lower highs. So somewhere here, you expect this to be a lower high, and you want to move towards this downside like we started over here. So it started moving down, but then it reversed, right? So instead of actually making a further move down, people really decided this was a good price to buy, and we actually broke structure in this area, and we started to move up into bullish structure. So that would be something considered a break of structure, and you could use this to your advantage in your trading to determine which way the market is moving. So for example, today is February 17th. I didn't trade today because it is a holiday, and you don't want to trade on holidays because there's typically less volume. So the moves are a little, the market's more choppy and you can't really see clear moves. But we have this bullish structure, I would say. And heading into tomorrow, a potential direction that I want to see is, again, let's look at this. So we have this bullish structure right here. I'd want to see a move to the downside first so that we can retest this area, or maybe even retest this area, so that we can make a further move up. Because as you can see here, we've touched this area. So this area and this area are the same. So we've touched this area twice, and then when we finally broke through, we made a pretty good move up. So now what I want to do is see the market retest this area, bounce off, make this higher low, and continue moving to make a higher high and continue with this bullish structure. So that's what I'm going to be looking for tomorrow. I stream live every single day in my Discord. Come join me. Follow all my socials. We're building a huge community in the Discord of honest people. And stay tuned for these videos, honestly. If you want to learn, if you want to trade, if you want to make some friends, this is what it's for, boys. So join the Discord, follow the socials, like it up, and join me on my journey. Let's get it. See you tomorrow.